Welcome to Ready Set Exec, the podcast where we sit down with executives across North America to unpack their business, leadership, and expertise.
And every other week, join us for Market Watch, all things hiring, real insights and no fluff. Hey everybody, I'm here with William Grenawitzke, managing partner at Bellows Capital Partners and venture partner at Erez Capital. He leverages more than 15 years of experience across private equity, venture, and corporate leadership to back transformative companies. His career spans senior roles at Ironwood Pharmaceuticals, Omnicell, and Mylan, as well as investment banking at William Blair and Merrill Lynch, giving him a rare 360 view of healthcare, life sciences, and tech from both the boardroom and the trading floor. William is known for bringing sharp financial acumen, operational insight, and an investor's mindset to scaling businesses, helping founders and executives navigate capital raises, growth strategy, and value creation. Good to have you on, William.
Thanks, John. Great to be here.
Yeah, thanks for coming. So we were talking a little bit about, a weird VC market right now where we've heard of, VC not, I think 50% of them haven't written a check in the last couple of years. It's been some wild statistics out there. So obviously getting funding has tightened up. There's a lot of risk aversion. And I think a lot of that happens to come from the roller coaster kind of economy where we're not really sure what's happening. So where do you put your smartest bets right now in terms of venture funding and how you get funding?
Yeah, I think the smartest bets right now are still the same. They're the ones that are really the companies that are really creating value and long-term sustained value. And I know that's pie in the sky, and I'll get into what that really means. But at the end of the day, I don't think things have really changed. The fundamentals are still the same. Venture is looking for quality teams with validated technology and in a big market. And I don't think that changes really. The funding, however, has gotten tighter. And so the barrier has gotten higher on what do you need to really become successful. And I think that's what we're seeing. A lot of the barrier is coming from, in my opinion, a lack of exit of the current capital that's out there. And so I think once we start seeing this exit, this log jam kind of being unleashed, and I think nobody can really time that, that's where we'll see kind of a rejuvenation of venture coming back in. A lot of venture firms, to your point, haven't exited as much as they'd like. They haven't returned the capital back to their LPs. And so the LPs also don't have their capital back to then reinvest as angels or in new firms or in second fund, third, fourth, fifth fund. So I think that's really where it stems, where the capital is kind of stuck.
So is everyone just like sitting on assets besides investments? Like it seems like the asset market has been ballooning. You see gold going up, 300% or something in the last few years, and other assets like housing and whatnot has been peak levels. Is it just that people have rethought their investment strategy and said, hey, why, when we have a safe bet that's paying at 30 points or more like per year, why bother? Like, is that it? Or?
I don't know if it's that or if you can get the returns at a lower risk. And so I was just talking to a house flipper, and he said, I don't invest in the market because I can make 15 to 20% returns flipping a house. I might as well put that cash into real estate and rolling it over than sitting in the market making 6 to 7% lately. And I think that people coming out of the pandemic have looked at other investment opportunities there. And so that's what I've seen, kind of that coming out of the pandemic, people were looking for assets that they understood that really had some tangible value. And with that, really trying to make that money work for them. And so I had no idea you could flip houses at that kind of return. And so when he said that, it made a lot of sense to me that people might be looking at different assets because different assets are creating higher returns. And I think that's where we're really seeing, to your point, Bitcoin is an asset, and that's gone up, exponentially. Gold. I had a fun conversation with my wife about the gold bars at Costco, and she didn't know why people would buy gold bars at Costco. And so we talked about it. And then there was an article that said gold bars in the last year at Costco have gone up 40%. And so she's like, oh, I see. And so I think you're right. Like, if you can make 40% on a gold bar at Costco, why are you going to take all the risk if you're in venture? Now, different investors, obviously, but same theory applies.
Yeah, I wonder if you're able to return it to Costco and get
That's
they'll pay you more for it. That's funny. I mean, maybe, you never know.
Yeah.
I would try it out. They'll take anything back, those guys. So
That's what I hear. That's what I hear. I don't think they're going to give you your 40% return though.
that's fun. So, okay. So money is, let's say people are rethinking their strategies and so on. So for yourself, right, like you have experience both from corporate leadership, but also the venture investing. So that perspective you have, how does that help you evaluate founders when you're going to invest, because you've obviously seen both sides, and that,
Yeah.
experience can help you sort of vet them, right?
Yeah, absolutely. I think working side by side in corporate for as long as I did really helped in that regard, because you can see the types of personalities that have succeeded or not succeeded. And you get to understand the difference between a lot of employees and founders. And quite often there's a difference in personality, and that's often a good thing. And so I think that experience has helped me navigate who I invest in or who I think about investing in, particularly around the people. I've said to other colleagues, I really look for high EQ, and not as just a buzzword, but what does high EQ really mean? And I really, I hate to say this because I have two girls that I default to this. I really look for kindness, compassion, and a thoughtful reasoning and thinking. Not always is that found in a hard charging CEO. And so I start with what I'm looking for, but also am willing to be open in looking at other people's strengths. A lot of founder CEOs, their strength is hustling and being out there and being very active. And so you don't always see the thoughtfulness. But what I think sets apart the ones that I like to look for and invest in, and the ones that I don't, is really that extra level of thoughtfulness, that there's a pause in a question and they actually can listen to the question. There's not an immediate answer to a question that I didn't ask, but there is a thoughtful, slower answer to the question that I did ask. And I think in the hard charging world that we live in, people often have answers to questions that weren't fully asked. And so I really look for kind of a calm demeanor, a thoughtfulness, because every startup, every corporation, every company is going to have failures, and it's going to have positives and negatives. And the people who can manage through the negatives are the ones who are going to succeed. And so that's to me, a EQ factor and not necessarily a tech or an IQ factor. I spoke with one entrepreneur who had exited 5 companies. He was in his 60s and had done that since his 20s, and asked him, how were you so successful? And he goes, I wish I could tell you, but as far as I know, it's just because I kept the lights on long enough to get lucky. And so that's the mentality that I think a lot of really positive entrepreneurs understand, that just because something goes wrong doesn't mean that the whole enterprise is a failure or that there's not a lot of value there. There's always value if you can pull it out of the assets that you have. And so that's the way I think about it when I'm looking and talking with people, that there's a slightly extra bar, that it's not just all data and numbers and the tangible. There's a lot of intangible, because you have to get through when the data isn't there and the numbers aren't there and all those tangibilities go away. Does your founder fold up, or does your founder move through it? And I think that's what really separates the two.
Yeah, there's not really an assessment or a way for AI to determine if the person is tenacious and resilient and able to fight through some difficult slogs. I could definitely relate to that. For us, like our first year was terrifying. We completely bootstrapped the company. We started it with whatever was in our pocket, and it was a crazy year. And it's funny because a lot of people will quit when the going gets tough, when really it's like you're almost up the hill, you're halfway there, just a little bit more, and it'll get easier, right? So can appreciate that. It's definitely some of the things we look at when we're building startups. That it factor people have, right? That they can bring curiosity, executive presence, those kind of EQ traits you're talking about, that are not like, you're not going to find them on a resume. You have to have a conversation with them face to face to really see the gears turning, and that there's, as you said, thoughtfulness and an actual good person as well behind all of that, because who are you going to want to follow, right? Someone that you trust and feel is a solid person, or just someone that's barking orders because they got the title, right? So inspirational leaders, I think I can agree on. So that's really
one of the stories that sits with me is, I've always heard, and I'm from the Midwest, so we're a hardworking culture, right? I've always heard, that guy will run through walls for you, or that guy will get things done, he'll run through walls. right? And I thought that, and so I kind of grew up with that mentality. But I heard, and I hate to say that I just heard it recently, that the follow-up to that is, that's great that people want to run through walls, but we have to look for the people who can find the door as well. And so that was really a change up to the whole thing. And I think that's really, like, a lot of us, including myself, are run through walls type of people, but the thoughtfulness that separates the ones who are, I think, really stellar and the ones who are really great, the stellar ones are the ones who find the door and are a little bit more thoughtful about things.
Makes sense. I mean, everything's a balance, I guess, and that's where being able to have the right conversations and as you said, thoughtful discussions about things with them is a way to sort of dig deep and figure them out, because oftentimes we're looking at pedigree, and I find a lot of recruiters too, they're looking at a checklist of, they graduated from this university, they have this experience, they had this job title for this many years, rather than, yes, but how effective were they, and did they make an impact, and what's their character like,
Yeah.
when you're evaluating an interview.
I think that, and this is normal. I've done it myself in corporate world, where we use the wrong metrics to make our decisions. They're good metrics, they're good data. There's high correlation, and it makes a lot of sense. So why would we not do that? And I think it comes back, the thoughtfulness is what separates the person who finds the right candidate and the person who finds just the okay candidate. And it's that little difference that I do think makes the difference, because I think the Atlantic I don't know if you've seen it. I was going to bring it up when we were talking earlier. The Atlantic just came out with an article about the job situation, and it was like, applicants are using AI to do their applications. HR is using AI to read the applications, and no one's getting hired. So that's the kind of world that we're living in right now.
It's crazy because all these tools are supposed to make things easier and streamlined, but if anything, it's bogged down the gears for the talent acquisition teams, because they now have 5,000 applicants, because your AI bot will now apply to every job it can find, right?
Yeah.
Or easy apply makes it, people are just clicking easy apply to everything to see what hits, right? It's less thoughtful. It's more just spam approach, and it's a problem. And then of course the teams as well are very lean now because of budgets and recession and whatnot. So they're overworked. I talked to some recruiters, they're having up to 30 requisitions that a single recruiter is working on to fulfill, which is insane to me. Like, our search firm, we keep it between 5 to 7 for our people. So
wow, yeah.
You get service. When you have only 5 recs, you have a lot of service to the customer, as opposed to 30 recs that you're chasing around like a chicken with his head cut off. I don't even know how they do that without, I mean, it becomes then just a mass, like, okay, they're qualified, quick skimming, and you're just throwing resumes around, because how else can they survive internally when they're internal teams, right? You're trying to
only have so much throughput, right? And so then you have to use, if the applicants are using AI to spam the application process, you need to use AI to filter through that. And then to your point, you lose the thoughtfulness. You lose the fact that, well, did we read that cover letter that gave us a bit more insight on their journey and who they are as an individual and who they are currently. And to your point again, you lose all of that because you have to just go quickly. What are the key, kind of indication data points, and go from there. And I'll bring that over to the VC side. It's very similar to ours. I mean, we've always had a lot in corporate development as well. We've always had a lot of throughput, but a lot of throughput is increased because the signal to noise ratio is so much more difficult to find. And so I spend most of my time trying to find the signal within the noise, because there's a lot of great noise. It's not all bad noise. There's actually a lot of great noise out there in the Midwest and in Michigan in general. More specifically, the venture community is getting bigger and bigger, and there's a lot of great momentum here, and it's all great. And I'm also looking for the ones that are a little bit out of the noise, that might tip the scale for me in a different way and push me towards investing in them.
That totally makes sense. With AI too, like as a screening tool, like it has its own bias, because we're training it with all the human knowledge, which is bias in itself, right? So that also causes other problems. It's funny how we think AI is going to be this neutral party, but it's like the worst of us at the same time.
Yeah. And I find that to be an existential question that is amazing. That how do we reduce the human bias into something that is being taught on its own, but with human bias in place, right? And so the people who are teaching it, the people who are doing it are, to your point, are automatically going to have a bias, which is going to give you, which we already see in AI, right? That there is a bias to some question. And it depends on what information is out there. And we see, and I saw this just on a website, a lot of websites, especially in venture new startup websites, if you've noticed, have a lot more text. It used to be very simple, visual and very little text, bring your audience in, make it easy. But that doesn't work anymore for people finding you and using ChatGPT and AI. So you'll see paragraphs and paragraphs written on websites now for startups because they want the word to pop up as much as they can to get theirs at the top of the SEO ladder, so to speak. And so that's a new twist as well.
Well, people are not using like Google for search anymore. Now they're using like ChatGPT for search. So it's changing the whole SEO game that you're playing.
Yeah.
I know for us, we just redid our website last month, and like we had to consider like now there's new channels. Now people are using Reddit, for example. Like it's an entirely different ball game than it was 5 years ago in terms of that. How is the change is also coming on the life sciences side for you? I mean, it seems like there's a lot of changes happening. You have downward pressure on drug prices happening, like Mark Cuban with his company, the generic company selling stuff at, I think it's at cost or something, or cost plus, I think it's called. And then you also have funding being trimmed back on universities that are doing research into these kind of things. So we're seeing it's going to be more difficult to get funding for the research you want. The prices are also being downward pushed. So how do you make decisions in terms of investing in healthcare, and also how did the life sciences company continue to operate, with this kind of environment?
Well, let me also say I'm biased because I used to work for a generics pharma firm. I think generics are actually good for pharma because it allows drugs to go to more people, more patients, and have a bigger impact. And I said that really quickly. It sounds a little trite, but I absolutely believe that. Those medicines are usually off patent and are in a different area. The R&D, I think, is actually a separate question. R&D research is getting cut, and we're already seeing really good research slowed. And we're seeing China, the headlines are that China is just starting to surpass us, which is unheard of because there's no reason for that. And so I think R&D and research funding is difficult. That being said, R&D and the world that it was in wasn't a perfect world to begin with. It was highly, or it still is, it's very much determined by on a pyramid scale, on a pyramid level. So being a young researcher is really, really difficult to become a really prominent scientist, because prominent scientists is just one thing. One of the things is prominent scientists don't leave. Why would they? They've got a great lab. They're doing great work. We don't want them to leave. We want them to keep doing that. But then at the same time, there isn't another position for a younger new scientist who's coming out with new work. The only place to do that is to get more research funding. So really what we're doing is we're just saying, hey, we're going to cut out almost a generation of scientists because there's no place for them to go. I am a scientist, and I was an engineer at Michigan, a scientist at Yale. I don't know if I'd tell my kids to go into science, because it's such a difficult world out there. I know brilliant people from Ivy League institutions with PhDs who are looking for jobs, in science jobs, because not only is the R&D getting cut in the universities, that means also, and I've advised companies to do this, professors who are lower on cash because their funding is getting tied up, start a company with the research and go fundraise. And if we start seeing that, we could see some amazing companies being built out of universities, but it's also going to put more pressure on the funding environment in the VC world that's already there. And so anytime we see cutbacks on funding, I think we're just going to see hopefully just movement and people getting really creative, but it makes it very difficult for all of us. And so that's kind of where I sit there.
Yeah, no, it's interesting times. It's been for the whole roller coaster economy, as I like to call it, because a lot of instability, both, domestic and abroad, with just everything that's going on. So we all have to adapt sort of day to day with how things are going. But I think also AI is coming into healthcare, and it's a big opportunity for it to help find cures for things and doing research. I was actually talking to another CEO who's helping with sort of that high latency AI use. There's another episode with Pure Nodal, and just there is new tech coming out that's going to help the research side of things at the same time, which is good to do things faster, to do things more innovative, and obviously using AI to help do it. Have you seen any opportunities on the VC side for AI enabled healthcare,
Yes.
or is it just sort of
So
still in the, it's like, oh, it's a
yeah,
joke still and we're not there
it's
yet?
a future thing. Yeah, it's Star Trek. No, I'm again biased because I actually focus on computational drug discovery. It's my area of passion. So I see huge leaps happening in that sector. When DeepMind came out with their technology and their paper and the transformer, I think that changed the game, and that really brought AI to the masses beyond what it already was. And that was done then, and this is a stat that I made up, so don't quote me on this. But Google then bought DeepMind. DeepMind had done a protein structure. I was working on structural biology when I was a graduate student. And the old mantra was, if you could come up with one structure, you could get a PhD. That's basically, and it would take you 4 or 5, 6 years to come up with that structure, but that structure would be your PhD and your baby. So if we say that a graduate student costs $200,000 for 4 to 6 years, whatever it might be, I'm just going to use round numbers, structure, one PhD at $200,000. Google went out and took all of the databases of all of the structures were out there and then predicted 200 million structures, the entire protein database in the human body. And they did it in 3 years. So 200 million times 200,000 is $40 trillion of R&D that was done in about 2 years. That's the power of AI in healthcare. And this is not just a small thing that's in the future and it might help some small thing. It has the power to transform our industry in life sciences and in healthcare. Go ahead.
No, I was just going to say, if there's one thing to have the data and the research done, but if no one's available to do the work to figure it out of, hey, this one's useful, or let's take a look at this one and do some more studies, because the scientists are not being funded, or they're not available, or they're as you said, choosing different career paths because it's not viable anymore, because it is a big ask for a young person to go take a student loan or whatnot for 200,000-300,000. You got to have some confidence. Either you got to really love what you're doing, but you also have to have confidence that you're going to be able to pay that loan off, right? Like it's worthwhile to get this degree, like as opposed to like basket weaving or something.
Yeah.
So
no, I
if
think
you're going to go and spend the money, you're confident. Oh yeah, there's jobs. I'm going to get a good wage.
Yeah. When I was an undergrad, I was partly an engineer because I knew I could get a job out of college being an engineer. My passion wasn't necessarily that, but I also enjoyed it enough to get a degree in it. So, it seems like today, though, myself included, we're all looking for unicorns, but not just a unicorn. We want a specific color of unicorn, a pink unicorn versus the purple unicorn. And so we're also all trying to be unicorns with, to your point, with different kind of data points. And I think that is also, that's a lot of the signal that we don't see because we don't get into that thought process, and we just don't have enough time to filter all the way through to get to know people. John, maybe I can push it back on you and ask you a question instead of you just asking me questions. What are you seeing when you're trying to fill, VC roles, or people who are coming to you and saying, hey, I've been in quote dev, or I've been in VC and I'm looking for my next opportunity? I imagine if people aren't making investments, they're also not hiring people to not make investments either.
Yeah, we've been very agile with the industries and who we target for business in the last couple of years. And the main reason for that is we got to make impact quickly. We're obviously trying to grow. And so there's certain industries where we've just, like, for example, right now, supply chain manufacturing, we've just said, hey, with tariffs, people are getting laid off left and right. Let's walk away from that industry for a little bit. Let's pivot, and we've had to do that. Now, where we've been very strong is that healthcare space, right? And
that's how we
are looking. Yeah, and not just in like biotech, which has had its problems, but primary, secondary care, and so on, clinics and whatnot. But to get back to your question, it's always a rub in recruiting between having a lot of talent available because of the layoffs versus having a tight labor market where everyone, for example, during COVID, everybody wanted to hire. It was the candidate market. There was a lot of leverage for candidates because of remote work. Our wages, we were negotiating packages, no joke, 50K above asking for executives. So if executive, they said, oh, our budget's 200, then we'd have the executive come in at 200 and they'd be like, oh, I have counter offers. So then we get to 250 to get them on. And they're paying it because they knew there was nobody else available. It was so tight. Now it's different. We got 4-5% unemployment. The employers are leveraging back to office for candidates. They're leveraging lower. Even the candidates themselves are kind of saying, oh, I'll go in a little lower because they know it's a very competitive market for candidates, right? Sorry, for jobs. And so it's a very dynamic kind of job where it can change by month, like in terms of who you're going after, who's hiring right now, what's hot. Seasonality is a piece of it. Right now, Q4 for us is always our biggest. Mm-hmm. But at the same time, we were very super busy in Q1. So it's like, it's a lot of it's anecdotal, depending on the industry you're in and so on. I would say though, for VC and whatnot, it's having those cross-functional skills is always very important, where, you have that hustle mindset, but you're also, you have some kind of background in, finance, or you've done several exits, or, there's not exactly like a Rosetta Stone for the perfect candidate, let's say. But the things we were talking about before, the it factor and the EQ and certain skill sets are really attractive to some people that are hiring. Then you have others that are just, as you said, they're looking for that pink unicorn. They give you a checklist and they say, go find me this exact person. And if I could make a Jello mold and make them, I would. But it's not like that. And that's where non-traditional candidates, job stretch, things like that, not only help us recruit better, but also allows us to have more diversity in our recruiting, which is definitely something that at the C level, it is a problem, in terms of if you're for diverse people, for people of color and so on, not represented at the C level. That's a major problem because it's a pipeline problem. And so how do we get around that? Well, we get around that with a job stretch where you see, oh, there's a director here, hasn't been promoted for 10 years. They're ready for that VP spot. Let's give them that opportunity. But if you're only looking for VP candidates, you would completely overlook them. So I think, needless to say, what we do with the research is an exhaustive search. And what I mean exhaustive is we're exhausted by the time it's done. That's how I tell them, we've done a good job because I'm exhausted.
Yeah.
So
absolutely.
It's an exhaustive search that's been done. So I hope that sort of answers it in a loop around way a bit. But
well, I imagine people who are watching this will want both sides, right? And so that's the fun part of what we do, is we get to both, look for places to do work and look to hire people. And that's very much the VC, right? We're fundraising on our side and we're looking to deploy that capital at the same time. And so it's a weird place to be right in the middle of all the time.
So maybe you can talk a little bit about that because, we talked about values and character a bit. And I think a lot of VC can also have a bad stigma around it. Like you've seen some of these movies like Wall Street and whatnot, and these guys coming in and like cannibalizing companies and doing all sorts of, they're legal, but they're not ethical. That's how I would put it, right?
Yeah.
So how do you square that circle? Because I believe you are a values-based person, right? So how do you?
I hope
do you
so. I try to be. Yeah.
Yeah. So how do you square that, right?
For me, I guess it's pretty easy. I follow the values that I believe are important, and I automatically know not everyone is going to have those same values, and I can't change that. And so I can make the ethical decisions. I chased happiness for a long time and kind of found it, surprisingly enough. And one of those things is being ethical and being positive light and trying to be kind and make sure everyone does well. And when you're being amoral or unethical in business or anywhere else, I almost can't do it because I know it's going to take away the happiness that I've built up, because that kind of negative attitude and that negative viewpoint will seep into other worlds. So for me, it's pretty easy. I know my values, I know who I am, and I know how to apply those. I think that we do see a lot of nefarious characters out there. My experience is that navigating around those guys just takes enough, or girls or whomever it might be, just takes enough to say no and say, I don't have a great feeling about that character. not sure. And there's enough people out there, enough great people. If you don't have a good feeling, either do more due diligence and feel comfortable, or feel good about walking away, because a quick no is sometimes just as good as a long yes. And so I think from thinking about it in the VC and people trying to take over, I think when people get to their wit's end, you see the worst in them. And so that, I think, just happens. Try to help people not be at their wit's end, do what you can. And then sometimes you have to walk away.
But that's also, I would say, where character matters most, right? When you're at your limits for stress. I know for me, that was why I was able to partner with Patrick, my business partner, was because we both were in a startup before. We already experienced that high level of stress, and I saw him at his worst and he saw me at my worst. And we said, okay, we were both solid when that happened. And so that gave me the assurance that, okay, I can partner with this dude, because when shit goes bad, which it'll be crazy hard the first couple of years, that he's not going to fold, or he's not going to reveal that darker side of ourselves that can sometimes be very negative and create problems, right? And so that's how I chose my business partner, which I can only give good reviews for. But I totally get what you mean, right? It's like you got to do due diligence about who you work with, who you partner with. It's almost like a marriage in business many times.
Yeah, especially for smaller companies where you're really, you're making a lot of critical decisions, and not every decision is going to work out exactly how you wanted it to. And you have to trust your partner to know that the intent to make a good decision was there. Sometimes the execution is lacking, but that's business and that's life. And so when that happens, are you the type of people, John, if it's a bad market out there, are you and your partner able to weather the storm together, or does it start becoming backfighting and backstabbing and things like that? And I think, to your point, I think that happens a lot in small startups. And in my experience, it happens a lot everywhere, but usually, and I can speak only about myself, but even when I wasn't, at my best, if I look back on it, it was because of an emotional maturity that I didn't quite have yet. And that's okay. I can say that now, looking back on it, but at the time, I had to answer for everything. And so, and I could use data to prove it and do all of that stuff, but not until, you get to a certain point in your career that you actually see, oh, maybe I wasn't quite as good as I thought I was. And that doesn't mean I can't be as good as I want to be now. In fact, I'm better now because I can see where my shortcomings were in, kind of junior role. And one of those things that I often see in founders is, and this is a general statement that people may or may not agree with, may be a little inflammatory, but sometimes founders just haven't grown up yet. They can do what they can do, and they're hard charging and they've got a ton of energy, but a lot of times there isn't the emotional maturity that I would want to invest in to get through those hard times. Because if you start getting to know their story and get to know them, you're like, I really like you, but I just don't know what happens when it goes south, and it's going to go south at some point. And so that's really where I converge on what do I do at that point. I mean, I think it goes back to how you said it. You fall back to your values. Hey, what are the things that I really care about? Does this person or does this team hit on those? It's going to hit on the science, otherwise we're not talking. But is it going to hit on the other things that are really going to be the things that create a successful company? Because successful technology and a successful company are two very different things.
Yeah, and it's funny because society now really puts emphasis on the youth, and and we kind of have overlooked the wise, old mage in the corner, the old wizard or whatnot. It's like wisdom comes with time, and I think we often, like, even for hiring, you see ageism a lot now for over 50. And to me, I'm like, no, like, they may not have the latest skills in AI or something, right? But the wisdom and the emotional maturity and the EQ that they've built, the soft skills that they've built over a whole generation.
A lifetime. Yeah. Through good times. And I can say honestly, like, a lot of my emotional maturity wasn't because I matured in business. It's because I became a father, and I had to mature in different ways that I didn't have a chance to mature into a father before I had kids, right? So even little things like that, I think life experiences help you. And so when we look for people to work with, that's, we're looking for those life experiences. Great to have young kids at a startup with a lot of energy and a lot of great ideas. And I still want a board member who has been through those and has made poor choices and has learned from them, and more importantly, has a background to make a decision. And so if you don't have the background upon which to make a decision, how do you make a good decision? And there are certain people who don't need the background. They ask the right question. And that's at the end of the day where I hope to be and where I try to be. And absolutely the difference between if I am investing in somebody or not investing, or if I'm doing a transaction or not doing a transaction. So the people who, and I think this is much more on the private equity VC side of investing, the people who are kind of best at their skill, at their craft, are the ones who don't have answers, but they have questions that absolutely need good answers to. Otherwise, things don't get done. And you can't come up with those questions unless you have enough experience to know what to ask. And that's where I think that being older or wiser, or being younger, but in the right environment, can give you that kind of level of experience and training to be able to see what questions need to be asked.
Yeah, I mean, having a good networking community you can be part of really exposes you to a lot. That's for sure. I was talking to someone the other day, and they're living in a founders community. Like, there's a community of founders all living in the same building, and they're all getting ideas from each other and learning from each other and whatnot. I think having that mentorship and stuff is so important, and we often overlook that. I think sometimes because you got your head down grinding, and you're not thinking it takes a village to learn and to sort of dig yourself up to where you need to be, right? On the kid side, I mean, I completely agree with you there because I had twins. That was probably the hardest thing I've ever done in my life.
Yeah.
The first years with them, while also working and having a pandemic all at the same time. But it teaches you things that you don't learn in any textbook. It's a humbling experience, and
I can honestly say my patience capacity that I didn't have in corporate world, 10 years ago, I have a lot of patience capacity now.
I believe it. So that's really good. And then last thing here before we head off, just for executives trying to shift maybe from they want to become an investor like you, they're an operator right now, they have some capital, or they're wanting to maybe pivot their career into more of the VC side. How would you, is the playbook, or what can they do to help them have a transition? What advice would you give for people looking to do that?
I think it's any number of ways. Number one, and I do this too, is leveraging your skill set. What skill set do you have to get you into that angle? Some of my close colleagues went the operations angle, and they went and worked for a startup that was financed by VC firms or private equity firms that they might want to work with or work for, and showed them how they could, what the value was that they brought. One of my good colleagues from Merrill Lynch has been in the C-suite for, I think, the last 10 years, and he is an operator. He went from an investment banker and a finance guy to an operator, and he has thought about, because he's been asked to go work within the private equity firm itself as like an operating partner. And so that has been a transition that I've seen for people who are coming out with a lot of experience. That seems to be a pretty good one. And then the other way is networking and seeing what people need. It's, John, you probably know better than anyone, it's matching needs with skills. And, there's no real good system for doing it. That's why there's so many. And so it's really just about that. It's really needs to skills. And so if you can fill a need, whether it's at a private equity firm or VC firm or within their portfolio companies, you can demonstrate, kind of what you can do.
I mean, also maybe getting involved in communities like yours that you have in Michigan, right? I mean, you were telling me a little bit about it.
Yeah, great. Thanks for reminding me about that. Yeah, absolutely. So in Michigan, we have a great pharma, biotech, life sciences community where a lot of previous employees of biotech or pharmas, Pfizer had a large facility here that they had left. And so there were a lot of executives here. Ann Arbor is a great place to raise kids. That's where I live. And so they didn't want to leave, not until their kids were older. There was a life science community that was built up. There's a good startup community and venture community that's here that has been small, but has really been growing really well over the past 10 years or so. And so that's another way, is find those communities that you can be a part of. I do it also myself. I actually find that I find business by being on board. I'm on the board of a couple of nonprofits here, and I did that because I wanted to give back. One of them, just to do a little plug, one of them is for adoption. I'm adopted, so I wanted to give back to others that are trying to be adopted, and happened to be on that board. And a woman goes, "Oh, you should meet my husband. He's in your field," and that created a new relationship. And so just like being yourself and being authentic, not in the Instagram way, but meeting people where you are being yourself, people see that. And then they say, "Oh, I'd really like to introduce you to so-and-so." I think in New York, Boston, a lot of the big hubs, even smaller hubs, Nashville, Columbus, and like that, they have ecosystems like this that are always looking for people. And there's a lot of networking that can be done. Ann Arbor just had one last night. I was with my girl, so I didn't get to go, but it's a great life sciences network where you just go, and it's not a job hunt necessarily, but it's just to go see people that enjoy doing and talking about the same things that I like to talk about, which happens to be computational biology.
Yeah, no, it makes sense. And I guess now post-COVID too, like we're kind of back to normal with all these events, and people got to change their mindset, because I know a lot of people, they've kind of gotten locked into the stay home and order Uber Eats mindset, and they're still doing it even after now you can go in public again. You don't need to wear the mask. You can go out, get some fresh air, meet some people. That's always good.
And
networking.
John, and it was like you and I talking before, like if you don't have that muscle memory, if you don't get into that habit, and if you don't, and you're coming out of, I'm one of these. I came out of COVID, and I was like, I didn't have the muscle memory to get into an office and to work like that. And it takes a little while to get. And so working from home has its own skill set. Working from an office has a different skill set. And if you get out of habit, getting back into that skill set, just like anything, or like riding a bike, it takes a little bit to get more comfortable again.
Well, I think the word is for everybody to, get off the couch and go get involved and meet people, and you'll never know who you're going to meet, or conversation will come up, right? So
yeah,
I appreciate this one today with you for sure.
Yeah, thanks, John. I'll end on just a quick story on that. One of my favorite connects that I made, I let a guy use my phone at an airport. It turned out he was one of the biggest investors in New York, and he just happened to be taking a commercial flight. I can't believe he was on commercial now that I know who he is. But he happened to forget his phone at home, and we were at the bar, and I said, "Hey, do you want to use my phone?" He's like, "Thank you so much. I'm so-and-so. Here's my number. Call me." And I didn't know who he was. And I called him, and I was like, holy cow. And so just a little bit of kindness, just being, can go a long way.
Yeah, absolutely. That's a wild story. And then, of course, you got it pulled into investments and made tons of cash with them, right? That's the whole story.
I wish that were the case. We ended up not staying in touch as much as we thought, but that's just the natural way things go.
Yeah.
But I think that it doesn't change the story itself, that, a little bit, you never know where it might go.
I appreciate your kindness today and having you part of our network here. So thank you so much.
John, always a pleasure, and look forward to working with you in the future.
Sounds good.
Thanks again.